Univesal Music Group, or UMG, is one of Sifter Fund's latest investments. But why did Sifter invest in it? Well, in short, UMG operates in a growing market, it generates predictable and improving results, it has sustainable competitive advantages, and it is available at a reasonable price. Over the next few minutes, I'm going to dive deeper into those arguments. UMG is a Dutch music company that was spun off from a French media group called Vivendi in 2021. But how does UMG make its money? Well, overall, UMG's business is to represent artists, songwriters, and composers. But by far the largest portion of UMG's revenue, about 80%, originates from representing artists. That business is called recorded music. Essentially, UMG operates as a record label, discovering and developing artists. UMG offers the artists the recording studios, expertise, marketing resources, and contacts that help the artists succeed. In return for these investments and risk-taking, UMG typically signs a contract with the artist, granting UMG the copyright to the music recordings that the artist creates. Typically, those contracts cover several albums. That copyright can be very valuable because the best songs are listened to over and over again. Once those music recordings are created, UMG offers them to distributors and collects income from them. By far the largest source of that income are streaming services such as Spotify, YouTube, and Apple Music. The rest originates from physical and digital music sales, public performances of the music recording, as well as commercials, movies, and social media. UMG collects income from these various sources and shares some of it with the artist. UMG then also compensates the original songwriter and composer for the use of their work. The global market for recorded music has been quite a roller coaster. Since the turn of the millennia, the market has been undermined by online piracy. However, since 2015, the market has been growing again, driven by streaming. This is because streaming offers an exceptionally convenient way to enjoy music. For a fixed monthly fee, the consumer has an access to an unlimited amount of music, while algorithms continuously offer content that best fits the consumer's taste. But what initially drew our attention to UMG? Well, at first we noticed its quantitative strengths. By 2021, UMG's revenue has grown at about 10% annual rate over the past 5 years, and that growth has been mainly organic. Meanwhile, UMG's operating margin has improved for many years in a row, driven by economies of scale. UMG's operating margin is in line with the main competitors, but the company's performance has been more consistent. In addition, UMG's return on invested capital is clearly above the competition. However, these quantitative factors represent the history. What kind of guarantees do we have that UMG will perform well also in the future? Well, this brings us to qualitative strengths. Music streaming services such as Spotify, Apple Music, and Amazon Prime rely heavily on record labels for music content. The supply of that content is very concentrated. The 3 major record labels, Sony, Warner, and UMG, hold a combined 70% share of the global recorded music market. And each of these majors owns rights to certain original music recordings, lyrics, or compositions that the other one doesn't have. Therefore, none of them can be easily replaced by the other. Meanwhile, UMG is by far the largest supplier, holding over 30% market share. And as a result, it would be very difficult for a music streaming service to have a competitive offering without UMG. Or would you pay for a streaming service that lacks about a third of your favorite songs? A large part of UMG's content will also stay relevant for a long time. As mentioned, the best type of music is listened to over and over again, for years, sometimes for decades. And a large share of UMG's revenue originates from that kind of long-lasting hits. For example, in 2020, over half of UMG's recorded physical and digital music revenue originated from songs that were released over 3 years ago. This suggests that UMG will remain an irreplaceable partner for any music streaming service for a long time. But what about the artists? Why do they choose to sign for UMG or for a record label to begin with? Well, firstly, it's not always practical to do everything on your own. Record labels offer the equipment, services, and expertise for every stage of the music-making process and also cover some related functions, such as merchandising. Secondly, record labels have marketing resources and industry contacts that can be crucially important for the artists. This is because, on average, it's very unlikely that an artist is discovered by the public. For example, there were as many as 8 million creators on Spotify in 2020, but only about 13,000 artists that generated more than $50,000 in annual royalties from that same platform. And that ratio has become more and more challenging over the past 3 years, suggesting that standing out requires ever more effort. And as a result, artists have the incentive to look for maximum support, and major record labels can provide that. These majors have industry-leading risk-taking capacity and networks. In addition, their content is crucial to music streaming services, and that crucial role might allow the majors to subtly influence how music is showcased in those services, including the content of editor-created playlists. Obviously, the more successful an artist becomes, the less dependent that person will be of record labels. And once the contract with UMG expires, the artist may choose to continue without UMG or sign a much more favorable deal for themselves. Well, fortunately for UMG, no single superstar poses a material risk. In 2020, even the most successful artist generated less than 1% of UMG's recorded music revenue, while the top 50 artists generated a bit less than a quarter. But how does UMG's future look like? Well, in our eyes, the penetration of paid music streaming services still has plenty of room to grow. The penetration is 38% in the US, 24% in other developed countries, and just 4% in high-growth markets, according to the research company Media. By comparison, in Sweden, which is the mature home market of Spotify, the penetration rate is as high as 45%, suggesting that the global penetration rate still has some meaningful upside potential. UMG's own medium-term target is to grow revenue at a high single-digit rate from the 2020 level and expand the adjusted EBITDA margin by about 5 percentage points to mid-20s. Sifter's current top-line estimates are slightly more cautious than that. We expect UMG's top line to expand at about 6% annual rate from the 2020 level until 2026, driven by the growing penetration rate of paid streaming services. Meanwhile, we expect operating margin to expand low single digits over that same period, driven by scale economies. Now, over a 5-year period, our estimates imply an acceptable valuation relative to our portfolio. Overall, we see that UMG fits Sifter's quality criteria. UMG operates in a growing market, it generates predictable and improving results, it has sustainable competitive advantages, and it is available at a reasonable price. Thank you.